I want to explain what cash flow is. As opposed to other kinds of reports, typically from your accountant, you receive an income statement or statements. The income statement is, as it says, it basically calculates whether or not you have any gross profit at the end of a particular period. You'll typically also have a balance sheet on there that is really a summary of what your assets and your liabilities are. So those are the two ways that most CPAs like to look at things. It's the way bookkeepers prepare things. But there are several kinds of accounting. That tends to be what we call financial accounting. It's used primarily for taxes. And so because CPAs are interested in taxes, that's what they're interested in providing. And then they'll do your taxes based on those numbers, which follow, ACPI rules, etc. But there are other reports, really called management reports, that many times will give you they're better tools for certain things. It's very difficult, for instance, to know what cash flow when you run out of cash based on an income statement. As a matter of fact, a lot of times they only touch just a little teeny bit, and that is, well, did you have profit for a period, and is it in the bank? But during that point in time, for all 30 days maybe, you'll find that the balance in your bucket goes up and goes down. And that depends on how many faucets you've got open, how much money is coming in through the faucets, and how many expenses or holes you have in your bucket. So they come from a couple of places. First, cash sales. When cash comes in the front door, rarely comes in the mail anymore, but you might count electronic funds transfer as cash. As that comes into your account, that's one source. And then you also have your accounts receivable. That also comes into your account in the form of a check, etc. But it sits on your books as an asset until somebody pays their bill. So in other words, you can have a sale, and it could be a cash sale, or it could be an account sale, meaning it is going on your customer's account, but you didn't get any cash. In a financial statement or in an income statement, they both show up as sales, but you can clearly see we've already discovered two kinds of sales. Then you can also have loan proceeds. That's a big topic right now, and one of the reasons that we're having this conversation is because of the PPP programs, and of course the other SBA programs. Then there'll be a lot more discussion about that as this series goes on. Loan proceeds comes into the business as a form of cash once it's been funded, and so obviously it's another source of cash, but it's not sales. Then you have an asset sale. You can just take something and sell it. It could be used office equipment or a machine, a car, maybe a building, and that can come into the business as cash. Owner investment, that happens quite a bit in small business, where you may just make a loan to yourself as the owner into the business, that is, and so that's a source of cash. That happens in small business really quite a bit. Then you've got the bank bucket, and the bucket itself holds the water. So as the drips or the water flows down the trough here in, as they hit these holes, they begin to come out in the form of expenses. And so you've got all of these other things coming out of your checking account, what you pay for your inventory or your raw materials, regular business expenses, of course, taxes. It's a big number. You can't forget about that. Any loan payments that you make, it really takes cash. That's treated differently on the income statement because only the expense of the interest is actually an expense on your income statement. But in this particular case, a loan payment does take cash away from your bucket. So that counts. Asset purchases, just like you can sell something, you can also buy something, and that takes cash, maybe a down payment, maybe maybe partially a loan and a down payment. And then what's left ends up as the owner's draw, balance in the bucket, leave it, you can leave it in the bucket. You can take it out as dividends in large companies. So those are kind of the things that you use that for. So what we want to talk about now is a concept of break even. Oh, by the way, this represents the balance in your bucket. Thought there's a nice effect there.